Getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, we're back to the A1 Trading Show with Chris Pulver. What's up, Chris?
Hey, Nick. Hey, listen
got a little claps for you today. That's awesome.
Very nice.
James,
What's happening,
James
man?
on the soundboard. Not a lot. Just watching here the Open as we, Chris, I think today I'd be willing to. Well, not willing to bet because I know I could do an options for this, and I know you'd call me out. But I don't think we're going to see much of a move today. What do you think? I mean, Palantir earnings, we could talk about that. That's kind of fun, but you don't have a lot of juice today in terms of anything else, right?
Agree. I'm going to throw something out there that I'd love to see. Let me share my screen here so Chandler has it in the background. I would love to see a little bit of a fade. We have a lot of pivots out there in the daily and weekly realm. So what I'm noticing is, maybe the big turning point's not going to be until next week with CPI, but the fact that this market has not acknowledged that we just had a pretty solid, 5, 6, 7% correction, and it's not like this was a V bottom, Nick, right? I mean, we go from this high to this low in a pretty fast, 3-4 day sell off that took a couple of weeks total, but then we go little bit up, little bit up, little bit up, and the market gets all excited. So I'd kind of like to see this. If I can zoom into my chart, you can see these little pivot guys. We have 3 in a row. 1, 2, 3. Also a fresh weekly and fresh monthly. So what I'd like to see today, this is the NDX. I'd love to see this pivot get hit around 18,045. I got a chart alarm set at 18,000. I'm calling that one out because I've got a pin butterfly price today that could be a potential 10x return. Now, issue is if it doesn't get hit today, then I'm going to take a loss on NDX. But if it does get hit, this thing is rock solid for a huge gain. So I'm cheering on the Bears a little bit today. But that being said, I mean, what I see objectively is if I look at the SPX, I see a gamma level up to 5,200, which is higher highs. If I look at the NDX this morning, NDX right now, gamma levels, I'll float this out there. Let's go into the 5-minute chart. I mean, you're not seeing anything to the downside. That's 18,051 fudge. I think I'm gonna be a little screwed on this trade today. I'm pretty sure it's not a big deal. It's annoying. If we have indecision, like you said, if we have no movement today, okay, big deal. But here's the SPX and the SPY. I just want to show you these levels. This is the SPX and the levels I see filling up right now, 5,200. So we could have just a slight gap fill today and then just a bit of a rally towards 52. The SPY and these all change like intraday. If we have some big buyers come or some big sellers coming in and these start to fill up to the downside, then I'll watch the intraday. But the SPY right now, which easy instrument for a lot of traders to watch, we could have a gap fill right in here, just this baby gap fill right in here, and then head back up to the same highs. And, the big gamma level I see today is at 520. So if there's a directional play, it still looks like we're just going to drift a little bit higher. If that's not the case, I mean, one thing that you and I both know has happened since last week is we got crazy fat gaps from Apple last week on Thursday to Friday, and then from Friday to Monday. I'd like to see one of those at least try to get filled, because it's just, what is it right now that's making this market so freaking optimistic? I don't know. This week is just earnings. Disney's down like $10 from yesterday's close. Palantir's down even though earnings were solid.
I think Frank nailed it. We'll have to hear from him a little bit. I think he nailed it on
he
his.
Did nail it. He got some profit on that. Yep.
Yeah, he. I think he mentioned with Disney and Palantir, he had a volatility play, and I think we'll have to hear it from the man himself in a little bit. But I believe Disney and Palantir both huge moves, and he's making some money on that. So very cool. Disney, Chris, I want to own some Palantir, but I've been saying that for me, one thing I'd like to buy this company. I'd like to stick some in the portfolio for the longer term, but I want to see the market freak out a little bit first. I don't want to
Yeah.
buy this thing in euphoria mode because, you know, one thing that I heard from their earnings report, they have an awesome product. I mean, it saves companies a ton of money. It's really cool. You know, they do a bunch of data, you know, extraction and AI stuff. And it, you know, what you need to know is, you know, the simple stuff is General Mills, I believe, said that they saved like $14 billion or something, or not billion, $1 million using their product in the last year or something. On their earnings call, there was this really excitement. You know, General Mills has found this ancient company has found a way to plug into Palantir and save a bunch of money. And that's a model that gets me excited because I'm like, if, you know, Palantir is getting paid X number of dollars to save companies way more than that, there's a lot of potential there. That being said, though, they also mentioned that slower growth areas like Europe and the government, that they're not seeing as much, you know, appetite to spend with them. So it's definitely a cyclical to a degree kind of company.
Sure.
AI stuff,
Um,
first thing to get bought by companies right now because there's not a
yep.
proven monetization path just yet.
Yep. You know, we talked about utilities yesterday, right? We talked about
We
utilities
did.
maybe being the place for AI infrastructure in a different way versus going like growth and
Mm,
throwing money at companies that claim they're going to have all these revenues and claim they're going to be the next big thing.
yep.
Utilities might be more of the defensive, slow play. One thing I'm gonna pivot to this for you. One of my followers posted this today in my trading room. I know that the font's really small, but this is what the markets are pricing in currencies, first cuts and probabilities. So we had talked about this. We think that most central banks will be cutting prior to the Fed. There's a lot of
Yep.
monetary policy divergence out there right now. And so I thought that the most dovish banks would be, besides the Bank of Japan, which is now technically not dovish. Number one, they're off of negative interest rates for the first time in over a decade. Number two, they're intervening whenever they feel like it, whenever that is, and
Sure.
nobody knows. But the Bank of Canada, Bank of England, I'm sorry, Bank of England, Bank of Canada, ECB are going to be three of the more dovish banks. RBA, RBNZ pushing out some potential rate cuts, maybe not even cutting this year. So RBA right now showing that there might not be a cut. Bank of Japan, possibly another rate hike in June or July. And then the Fed, we looked at this yesterday. The CME Watch tools pricing in about 2 cuts September, December are the
Hmm.
probabilities right now. So I just wonder if we're going to start seeing some moving and shaking because now we have monetary policy divergence. All this can change, but all eyes on the Fed. If the Fed's going to cut twice, now I'm wondering if other central banks are like, okay, the Fed's going to cut September, December. Bigger central banks maybe cutting this summer. Maybe BOC, BOE, ECB cuts like June, July. Obviously, we'll find out in the next month or two. But I still wonder. I mean, what are your thoughts on the dollar? I mean, your DXY. I still like the dollar index posture at this time, as long as we stay above 103.80. It's a messy currency, your index right now. But if we stay above 103.80, 103.90, I think this is a chance for traders to buy a dip that's really easy. If you, oops, I'm going to use a black line here. If you buy here with a tight stop loss and you are paid on that trade, that's a good trade. But I wouldn't take this big basket position on it. It would be it either works or it doesn't. And that's kind of my outlook on the dollar.
Yeah. No, I think in terms of what's going on right now, the dip on the dollar, there's a valid dip going on because now there's not this like impenetrable US economic data fortress that, you know, all the other currencies are just getting smoked by. I think
Hmm.
that has cracked a little bit. So you're getting a little repricing on the dollar. But I lean with you, you know, in terms of the dollar itself. I still think that the bigger picture is US outperformance. And if US outperformance is going to persist, the dollar's a decent play on that front. Now, in terms of the general direction of central banks, I think you can play gold for that, right? Because gold reflects, yes, it's priced against the dollar, but the spot price of gold goes up beyond just what the US dollar is doing. If there's news, I mean, you can watch, you know, Bank of Canada press conference or ECB or Bank of England, you can watch the price of gold and it's moving too, even though it's not quoted in pounds or euros here. So
Right.
I think that from a directional standpoint on central banks globally, I think it's fair to say that likely we are going to see some cuts start to come in, and that's going to be continuing to be bullish for gold. But specific to the dollar relative to its peers, I still think that the U.S. outperformance could be a thing. But I'm also just very curious. I mean, if you lose the inflation side, if you do get like the next round of CPI data coming in really light, I think there's still going to be room to the downside for the dollar. But again, the bigger picture, the longer term, I'm still dollar bullish, I guess, in terms of an outperformance perspective. That's the best way. I think, as you mentioned, that bigger term picture, like 103.8, you said, yeah, I think you might see on a cool inflation print, you very well might see the market make a move down there. But then, yeah, I think when the dust settles, you'll probably be also met with weaker data out of Europe, weaker data out of the Bank of Canada. So it's again back to a, as we've been saying, Chris, on our show here, it's a best of the worst kind of trade.
Sure.
All currencies are kind of seeing the economy start to cool after all this rate hiking that we've seen post-pandemic era. So I think there's a trend towards rate cuts, and it's now the question of who are you're betting on the least physically hurt horse in the race, right? Which horse is going to run the best, I guess, with injuries.
The one that can go into the stable instead of being shot behind the barn.
Right, exactly.
Yeah. I mean, I'm just watching the technicals because I just looked through the dollar basket. I mean, Aussie dollar nowhere near confirmed. And right now I'd say that the euro dollar, pound dollar, dollar CAD may be my top three. If I'm going to see dollar strength, those are probably the top three I would prefer to trade as opposed to the others. I think Aussie dollar, New Zealand dollar, also commodity back for both of those too. The Aussie, New Zealand might perform better than the euro, the pound, and the CAD. So that's just my outlook. I mean, if I like the trade, it's probably going to be take a short on the euro dollar, take a short on the pound dollar, and take a long. I'm already long on the dollar CAD at this time, but I'm going to see if this level holds. Gold, I'm still in. Silver, I'm still in. Bitcoin, I'm still in. I got some good fills there.
Chris,
we do
what
have
do
a
you
lot
think
of
about
earnings this
oil?
week.
What about oil? You
Yeah, you
mentioned
know what?
dollar
That's
CAD.
a good question. I looked
That's
at
probably
oil this
helping
morning.
your CAD trade, right? Because CAD weakening oil, I imagine. Am I right
This
about that?
actually, what the one that's helping me the most is my CAD trade that's benefiting me in currencies is Aussie CAD. I'm long Aussie CAD, New Zealand CAD, and this one's finally starting to pay out really nicely.
Okay.
I've been leveling in on Aussie CAD since we had this trend line break. I've been leveling in at these lows, and just every little trend line break, I've had 3 or 4 positions entered in, plus long on this larger trend line. So this is another one of those like investment positions where I like this head and shoulders, left shoulder, head to neckline, and I'm looking to see if we can break this, and we're heading up towards maybe 94, 95. So there's still plenty of upside potential on Aussie CAD. I like this trade a lot. So this is the one I'm actually benefiting from. Dollar CAD, I'm just kind of in with a bigger swing. So because the dollar's been getting some pullbacks, but my stop on dollar CAD is below this low, and I have trade 1 here. Trade 2 is a pocket fill around 35.50 that hasn't been filled yet. So I'm looking to see if this dollar CAD will just consolidate and then maybe make another push up towards 39. Now you said oil. I looked at oil futures this morning. So here's oil. Here's the price. I said that if we don't really breach, $77.50 to $78, I'm still looking to be a bull on this. But I'd feel like an idiot if I decided to get into an options trade on USO or oil futures and this thing just stays red.
Sure.
So I don't think I'm going to touch oil right now because I said the easy trade is why would I guess here when it's so much easier down here? Like
Sure.
buy that level and don't
Yeah.
guess where this thing's going to bottom out because I don't really know what this is. Like why is oil falling outside of there's been more supply put into the markets, there's been higher production. But it's been weird. I mean, I think since we've had cooling inflation and I know we have CPI and PPI data next week, um I do think that data point, I think we talked about this yesterday in the show. I think that data point is going to intentionally come in better than expected.
Yeah, and that's the thing, Chris. You mean you have a couple things here that are tricky about the price of oil right now.
Yep.
Political concern in the Middle East. I don't even like trading off that, Chris. Like I just want to point that out.
Yeah.
A lot of people, that's the first thing they'll point out is like, Israel and Iran and Hamas, and like yes, but you can't predict that stuff at all. Like there's no, what I can do with economic data is I can at least say, here's some trends that we're seeing. Like, although that might not have been a great example, like Friday's NFP, if you looked at it and you said, well, 5 months ahead of this, we've had higher than expected prints, that's a trend that you can at least spot. Now, there's a sudden change in that trend. That's something you can trade. That's something that you can like observe. But for me to say, as just a guy on the other side of the planet, like, here's what's going on in the Middle East. I think this is going to happen. I think for me to speculate without being
Right.
anywhere near the action is like, I can't do that. Now,
Yep.
can I apply just a general risk premium if things do seem escalated? Sure, but I can't predict what's going to happen next.
For
That
sure.
risk premium right now, though, seems to be coming out a little bit of the market. So why is oil down, gold up? Well, I think I would say, Chris, that the slowdown of the economy helps gold, but it hurts oil.
Definitely.
That's my best guess. Would you agree? Like, is that the idea?
Yeah, because your slowdowns were here, right? Your slowdowns were here. This was the explanation for why we had, lower oil prices is the global slowdown, the China
Mhm.
slowdown, the US
Yeah.
slowdown.
Yeah.
All those reasons were why oil was just stable, low, low, low. And then all of a sudden we got the rip up here. Um, this this by the way, like this price action, was this wasn't Russia Ukraine. Russia Ukraine happened before that. Um,
2022. Yeah.
yeah, so I mean, I don't even know what that is other than just technicals. I mean, that's the thing, man. I can attach and pretend like I know what's going on. It's like I don't. I mean, all I know is the market can absorb so many geopolitical things and not even acknowledge it. But it is strange to see that oil is down from these recent highs. I mean, we've had a double-digit pullback on oil, um, high to low. We're looking at about 11% correction.
Yeah.
I still, here's what I will say. I'm willing to take a trade in oil if I see this. If I see something more convincing, I'll probably put in a credit spread and take an oil stab that goes maybe back up into this range, and see if I'm right. And it would
Yeah.
be defined risk. It wouldn't be anything crazy. But ideally, I don't do anything until it's so obvious, without guessing, just in case this gets lower, lower, lower. Because last time we had this move, right? We did drop a lot in oil, and all of a sudden we're talking about oil at a bargain level, which maybe that happens again. Maybe we get to 70, $69 and it looks a little bit more attractive.
Yeah. Also,
But
Chris, just I thought about it for a second longer while you're speaking on that September move in oil.
yeah,
I remember what was going on. Inflation was ticking back up. The market was correcting because remember going into like October, this is 2023, stock
that's
market started to look
true.
terrible. So there was a rush for the energy sector. Inflation was driving prices higher. There were still conflict, concerns about, I don't think it was the Middle East, but I think like China and Taiwan was a concern at the time. So I think, you could tell a story at any time for why the
Mhm.
market makes a move. But I do remember that a lot of people, I remember during CNBC, everybody just pumping on the XLE, be long energy because the market's going to go back and hit the lows again. And then sure enough, as the inflation yields started dropping off a cliff, that really smoked the price of oil as people said, see you later, oil. Inflation's no longer, and we're going into tech. And tech just
Right.
flew back through the highs. So yeah, I
Right.
just remember just fun times. But yeah, I sometimes will do that, Chris. I'll like just go back in a random time in the chart and be like, what were we discussing? And what's so
Yeah.
fascinating to me is the story just changes dramatically over time. You
Yeah.
go back and find a chart and be like, wow, we're not talking about any of those things anymore.
Well, and this, I mean, you talk about storied markets. I mean, that's what this entire year has been. It's like last
Oh
year
yeah.
was the hype of AI and the recovery off of a 2022 reality check, and 2023 was not the broad market. It was the Mag 7, and then the Mag 7 quickly became AI, and now it's all Nvidia and it's semiconductors. It's like it's funny how the market can just latch onto a narrative and run with it. It's like it constantly makes people feel like they're missing out. Like, how do you
Yeah.
not know that it should be everything's in? I mean, I've looked into the research and found 10 of the top like semiconductor based ETFs, and I'd had a conversation with somebody yesterday. Somebody asked me if I would trade Boyle for natural gas, which
Right.
it looks attractive, but it's like Boyle's not a long term anything. So if I want to be long natural gas, which by the way I do want to be long natural gas, but there's no good way to play it for me. If I did, let's see, NG should be nat gas futures. Yeah, so if I go nat gas futures here, I mean we are well off these lows, which is great, but I couldn't get the trade that I wanted outside of doing like naked puts on natural gas, which obviously would pay out here now. But it's
Sure.
like I mean, this goes back to February, March of last year. There has been little to no excitement in natural gas outside of people just getting, their lunches taken, eaten, whatever, like all day long. So I mean, I don't know. You can look, you can observe, you can comment, but sometimes it's like sometimes not trading is still good trading. If you really don't know the instrument or know the rhythm and cadence behind it, like cocoa futures, we talked about that yesterday, right?
Mm-hmm.
I don't think I'm going to trade cocoa futures. It's like it's
Sure.
just a parabolic move that's starting to come back and revert to the mean, and there's backwardation and contango and all these crazy stuff in the options world. But Boyle, for example, is like a double or triple leverage instrument. I
Yeah.
was looking at trading. I mean, those are great, but those are not meant for anything long term. Like literally, those can be repriced within like days to weeks. And if if you don't time that really, really well, you will get hammered on some of those leverage instruments.
Yeah.
So I
And
just don't think the investors
speaking of
know that.
cocoa, Chris, I don't know if you
Yeah.
saw this. It's up 10% today.
Is
My
it really?
goodness.
Yeah.
That is just insane. 10% in a single day. Just casually, I'm going to go buy
There it
a
is.
chocolate bar at the store and it's going to cost me 10% more than yesterday. That's just crazy.
Well,
Now it's going to
what
cost me a
look
dollar
at this
10 instead
though.
of a dollar.
Look at this right here. You got to give props to the old Fibonacci's, the low to high, pull back to the 618, it bounced
Oh
right
my
there,
goodness. Yeah.
and it's right at this. And what does this mean? I have no idea. We could go. I mean, if you didn't pick the level to go long on cocoa futures, I would say the next spot would be okay. So we pull back into there's support, there's resistance. We could pull back into this area. If we go
Yep.
high, low, this would be your dead cat bounce where it's like cocoa's up and then cocoa's down.
Mm-hmm.
Or I mean, I would say this. I would still sell. I would maybe take an options play, cocoa futures. If we somehow get back to 12,000, I'd take a stab at that with an options play.
Yeah.
Define risk, nothing crazy. It's like I'll risk $500 on that trade. If I'm right, maybe I can make 500 to 1,000. But I'm not going to get caught in this whirlwind of price action that I can't control.
Sure.
It's just nuts, man.
Yeah, it absolutely is. Chris, I remember there was a time, I'm trying to find it, a couple of years ago. I remember on Bitcoin, it did something similar. There it is. Like Fibonacci's, man. Sometimes it's the simplest stuff. Like it's almost like markets get so complicated, but then this is just
Yeah,
like, is it too good to be true? Is it too easy? Just buy the 61.8% retracement. Yeah,
right.
it probably is. But sometimes when it works, I mean, this would have been the risk to reward factor of a lifetime if you had
Right.
played that Bitcoin. Obviously, Bitcoin, it's not, if you're long at any point in the last 10 years, you look like a hero. But
Sure.
I had somebody, Chris, on I was talking about a little bit of my performance here on Twitter recently, and somebody was like, "You've massively underperformed Bitcoin." And I was like, "You are very correct." I was like, I don't know
Yeah.
one trader on planet Earth that can outperform Bitcoin, like on the long-term basis.
Well, I mean, I guess your Michael Saylors of the world will outperform
I
when
guess so.
they're gonna hold their entire company hostage with a Bitcoin holding. I mean,
Yes.
MSTR, by the way, 1274. I mean, this was essentially looking like a parabolic Bitcoin there for a moment, and then reality came in, and
Yeah.
they've had a 50% correction since those all-time highs. And on top of that, this earnings report on MicroStrategy is terrible.
Yeah.
Right? And they had this huge. And why is it back up? Because it's Bitcoin. I mean, it is crazy. Like this company's sitting on 100,000+ Bitcoin that, with the real value, is like $6 or $7 billion. I mean, they could cover all of their debt if they wanted to. Honest, I've got this. This is interesting. If I go to Snowflake analysis, I'll just find a little spot check on MicroStrategy.
Yep.
It. I mean, it's not included in any of this, right? This is this is MicroStrategy on a Snowflake analysis. Dividends, nothing, right? Highly volatile share price, less than 1 year of cash runway with a company that has $6 billion in Bitcoin holdings. Okay.
Wow.
Unprofitable, not forecast to become profitable. Like this is crap from a fundamental standpoint compared to, I mean, let's just say MicroStrategy, it's tech. It's not a Microsoft by any stretch, but just at a glance, if you did a Microsoft, okay, look at the difference of, is this more attractive? Yeah,
Right.
right. But
Exactly.
Microsoft doesn't have $6 billion of Bitcoin. MicroStrategy does. I don't know what the end game is here, but you know, I think at this point, if you know the story of MicroStrategy and Michael Saylor, that the guy's not selling, the guy's not wanting to cash in. If anything, I think when the stock price is up here, he was cashing in on MicroStrategy shares, but not Bitcoin. So it's, again, what I don't even know what I was talking about with this outside of, there's just a lot of wild stuff going on in Bitcoin. I mean, what did I do here? There's a low, there's a high. We came back to the 618. Nick, you and I could probably find a ton of charts where you get these big swings, just drag a fib on it and see where the market responds. And we did that on the, I mean, the SPX. I mean, I'm looking at the SPX, SPY. I've done the same thing here. I mean, take this October low to this all-time high. This is why I'm still wondering, can this market justify a bit more of a correction? I mean, having a 236 pullback on a 5 or 6 month swing and a crazy 25 to 30% rally usually isn't how indexes perform.
Yeah.
So,
no, I think,
yeah,
you know, I think a lot of, in the short term, a lot of the fears that we had have washed away, but that doesn't mean that at some point there won't be, you know, more fears. Like maybe we go sideways for a little bit and maybe new fears come into the picture. But like right now, a lot of those things like Middle Eastern conflict, rising 10-year yields, earnings, I mean, all those fears right now have washed away. It's why the market is, you know, is recovering right now. But again, it doesn't mean that new fears won't come around the corner. It's like, you know, the story always changes, where there was, you know, there's always a wall of worry when it comes to the stock market. And yeah, I mean, it's usually the new emerging fears that cause a new dip. So we'll see.
Sure. Well, it's, and I know that Frank brought this up yesterday. I mean, have you sold anything on your TLTs? You were assigned on TLT, right? You still hang on to that?
I'll show you my position here.
Okay.
I did get assigned. I am in the red, down $1,000 on my TLT covered position.
Okay.
Now, so I got assigned. I wrote a 92 put that I sold. So I got assigned. Oh, sorry, 93. Collected $1.07 in premium. Got 91.93 as my average fill price. I'm in the red on my position. I've sold calls that expire. I sold this like 1 month. So this was a monthly call that I sold for like nothing, like no premium, because the market had moved against me a bunch. So there was just not enough premium. I still sold it just because I was like, you know what, it's better than nothing, I guess. And I'll take the position. But now I'm feeling a little better about TLT, Chris. I mean, with the round of data that we've had, I don't hate the idea of like, you know, if I don't get called away from my shares, I might still write a little bit of a further out of the money call again, and just like let me hold on to the shares if I can, because again, I think now you're starting to see the TLT story come back into play. In fact, on the Edge Finder, I believe we actually have a bullish reading currently for 10-year bonds. And that's kind of filtering in, you know, you've had weak economic data that's giving a nice read. Inflation's pushing back on it. But again, as you mentioned, if we get a light print, I think TLT might look really good, but we'll see.
Yeah, the light print, and I guess we'll find out more next week, because does the light print mean that we're all of a sudden going to have the Fed change the CME, like the CME Fed Watch tool again? It's looking for 2, and then we have a light print in inflation. The market's like, no, the Fed might cut 3 or 4 times now. I mean, it would be like, just imagining like the slinky effect of coming into the year thinking 6 to 7 rate cuts to 0 to 1, now 2, and the market's like stoked about 2 cuts. It is, I don't know, man. It's just super emotional. It's like the market is so emotional. It's like it wants to latch onto something. And then that does make trading fun, when it's like you can latch on to a narrative that, you know, yeah, I can be confident in the, like the SPY or the index is going another 10 to 15% higher, as opposed to at best. I think right now, at best, we go retest all-time highs. If this doesn't pull back, I mean, I'm looking at the markets today. I'm watching very closely. But if we don't have like a red day today, and this is just another green with 3-4 gaps in a row, I mean, at best, I think we test the highs and then we just fade this thing next week with CPI data. I don't know, man.
We'll see, Chris. So here's the thing too. You know, you mentioned that the narrative around rate cuts being the narrative. I just want to show you this really quick.
Okay.
So let's do this. I'm going to do a little top bottom action. We'll do 10-year yield on the bottom here. Okay. And let's just go just straight price. I'm going to put the daily chart. Okay. So I just wanted to show you this because I thought this was interesting. So in this October-November rally, as you know, it was brought on by yields dropping, and people were thinking, oh my gosh, 6 rate cuts. This is going to be amazing, which never made sense to me. I mean, obviously hindsight's 2020, but if you go back, Chris, you and I were both like, do you really want 6 rate cuts? Like, that's not actually a good thing. If you're gonna have 6 speedy rate cuts, rate cuts are like always the sign of a recession. Like historically, slow rate cuts are what you really want. So the thing though, is that the market, got super excited on this, but then yields started to go higher, and yet the market kept going higher.
I know.
So that's the weird part. But then I guess what you could push back, what somebody will argue is a good point for why this sustained, is that earnings have still been impressive. So yes, we lost the yield. Yeah. Buybacks, return to shareholders. So there's an argument for it. But again, I still think that to get overly euphoric without this narrative, look how just simply powerful yields dropping were for that rally. To say, oh, it doesn't matter anymore, that's weird to me. You know what I mean? Like, that's the weird part.
Definitely a disconnect. And looking at this, this recent little drop in rates, I mean, I don't see rates getting repriced super aggressively when we still haven't had a cut. Even if the market's going to price it in, this is a buy the rumor, sell the news. I mean, we're still going to be sitting at best 4.75 by the end of the year. If we have 2 cuts, where it's going to be 25 basis points. The Fed's not chopping 50 basis points off right now. Other central banks, I'm curious if, like we said, the Bank of Canada, ECB, Bank of England, if they start cutting this summer, or any central banks for that matter start to cut this summer, what type of chunks they take out. I would imagine no bank is going to cut more than 25 basis points at this time, and they'll take a cut, they'll test. And I did look at this. I think I still have this up. Inflation by country, and I just went through the list this morning on the G20s here. And I mean, let's go to some of the G20s, and let's go alphabetical. Okay. So let's go kind of our major currencies that we trade quite a bit. The previous print, Australia was 4.1, now 3.6. Their rate's 4.35. Canada, 2.8, 2.9, bit sticky. Canada's got a lot of stuff going on, with their housing situation, with they have variable interest rates for their housing. Those repricing are going to be, I don't think it's really being talked about a lot, but this could be a crisis on the brink with Canadian real estate.
Yeah, I think it's worse there than it is in the U.S., right?
What's that?
It's worse there than it is in the U.S., I think.
Absolutely. And I wonder if this is going to be like, there's going to have to be some type of help. I mean, if you have, I don't know. I mean, think about, so the U.S. right now, because of COVID and refinancing and moving, like that quick, like 1 or 2 year period where everybody was moving, relocating, leaving cities, vacating, whatever. But everyone locked in. I think right now, about 90% of mortgages in the US are like 6% or less. And I think about 65 or 70% are sub 4. So our mortgage rates are, and we're locked in for a true fixed 30-year mortgage. Canada has a variable rate that's reassessed every 5 years.
Yep.
And so if you, I mean, coming up, could you imagine, and anyone's home situation that's watching right now, could you imagine, like, my house in Michigan is 2.72%. If I had that house for 5 years and I was forced to refinance at 7% at today's rates, wouldn't want to afford to be, I wouldn't stay there. There's no way that I would stay there. That's insane. So it's essentially tripling your mortgage, and there's nothing you can do about it. So I do think that's something in the future, maybe the next 12 to 24 months, that needs to be really considered, because this is all happening. Because you think about COVID, right? 2020, with all these refinancings happen, what happens in 2025 when this variable rate is checked again? It's going to be another round.
And then on the real estate front, Chris, you could also throw in there, just for added spice, the corporate real estate world in the U.S. is a nightmare.
Interest only expenses and debt restructuring, all that stuff.
So regional banks, I mean, I am a believer of staying away from regional banks personally, just because, again, you're that's one area where I don't see, in the AI revolution, a massive increase in the demand for office space. So that's a tough one for me. But I don't know. We got Frank on the line. He's going to be joining us in just a moment. Before we bring Frank in here, Chris, I'm going to step out, give you guys the floor for a little bit, go through some stuff. I'm curious to hear about Frank's Palantir and all that good stuff that Disney moves.
Yeah.
But before I do that, let me just remind everybody who's listening, guys, if you're not already following Chris Pulver on his own socials, if you're watching on Twitter right now, it's at Real Chris Pulver. If you're watching on YouTube, we'll drop the link to Chris's YouTube channel. And also just a quick plug for our own channel. Make sure to subscribe, follow wherever you're watching. We do this on a daily basis. Chris comes on regularly as well. We're adding value to the community. We're doing our best. So if you support our work, make sure to hit the thumbs up button, like the post wherever you're at, and subscribe for more. All right. Right after this, we're going to come back. It'll be Frank and Chris. If we just do a quick break here just to set up the cameras, we'll be right back just after this.
Thanks, Nick.
Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Hey Chris, what's up?
What's up, Frank? How are you, man?
Pretty good.
Good. Let's chat.
Yeah. So, what you looking at today?
Are you out of? So you and I were talking offline. We both got out of Disney, which was a good trade. Your trade on Disney was a bit tighter than mine. My trade on Disney would still have some room to run if I was still in it. I can check and see what that would have been. I hate doing this because it just makes me feel bad, but I took the trade. There's my 651 debit for an 825 credit. If I put the trade back in right now, $9.40. So it'd be up about $3 a credit versus $2 a credit, or $1.75 that I took early this morning. So just a little follow through. I should have held out a little bit longer. Anyway, it is what it is, man. It's earnings. It's a nice move to the downside. We'll take the profit. I'll say this. I mean, making $1.75. So I paid $6.50. $1.75 out of a $6.50 move. I still made 26.9%. I like the 15 to 25%. It's high probability. That's why I trade earnings. Get a couple of stabs like that. It's worth it. So I get it. It's just nice that, you know, could I have waited? Yes. But immediately, here's what can happen too. You can have the market gap lower like this and immediately start to fill that gap, and your value will dramatically shift where you're in profit at opening bell, and then later in the morning you're not. So it's totally fine just taking profit at it as is. Your debit, what was yours, like five something, and you closed it out at 7 something?
Yeah, I forget the exact number, but let me go back and check.
Okay.
It was so let's see, Disney was at 5.2, I think.
So a 5.2 debit?
Yeah.
Okay. And then you close it out for what?
It went up to a 692 credit, or 692 debit.
Okay, so you close it out 692 minus 520, $1.70 out of a 520. That's pretty good, man. You made 33% on that position. Nice play. Frank or Nick says something about Palantir. Are you out of Palantir already? Did you get out of that trade, or are you still in it? I'm still in it too. Okay.
It's not really showing much of anything profit wise.
I'm upside down on my Palantir. I've got a 3. It was an inexpensive trade. I think I got a 320 debit right here, and right now Let me go into the actual trade itself. So Palantir 1, 2, 3, 4. If I were to close it, it's trading about 295. I'm upside down about 25 cents. So I have the 2450. I mean, what's kind of stupid about this trade is, hang on a second. What's the trade that I'm in? I mean, we're trading at 2158. That's real price. Yeah, so I'm giving it some more downside, but 2450. Let's look at just the real value. 2450 to current price is 2150. This should be trading for around $3. Unfortunately, it's trading exactly at $3, and I'm not getting any extra time premium in that long side. So that's the good and the bad. I mean, my sell side, as far as the puts go, it's out of the way. I'm trying to give it some runway. I will be hopeful if we get to, 20, let's say $20. If we get to $20, could I have $4.50 and turn this into a 320 debit turns into a $4 credit, $4.20 credit would be awesome. If I take $1 out of this trade, that'd be about a 33% return. So that's what I'm looking for as we move a little bit lower. Worst case scenario would be we have our gap right here and then the market fills it. But best case would be that there's a little bit more pressure on the downside. We come in a little bit lower. If we can try to find this $20 zone, I'll probably take profit there, Frank. Getting in with the 2450. If we get 450 of real value on the put side, and I traded it for 320, I'll take the profit there if I can.
Yeah, I would too. I'm still at break even from yesterday, but
Yep.
I kind of don't really want to trade Palantir anymore. I just want to own it, especially after a drop from earnings.
Yeah.
I see
So
Palantir being a good play in the long run.
Long run, yes, but well, I'll say this: if I'm looking at from technicals, here's what I'll say: I'm willing to take a stab at Palantir if we come back to like $16 or lower. I'll trade it. I'll trade it like that. I mean, $16. I can use active options to lower the cost basis. I mean, I did this on SoFi. I started participating in SoFi at $14. I own it now at like $7.30. That's just with options. So I mean, lower the cost basis. Take I'm long term on SoFi. It's not the same stock at all. I'm just saying based on this price action, I would like to see from this high if we pull back into at least this pocket or pull back into this cluster, this $16 to $12 area. That to me is where I'd participate. Use options to lower the cost basis. You want to be longer term, sure. That gets really exciting to own a stock at $12 with a high up to 45. Gets really exciting. But let me look at something since we talked about Palantir. Let's see what this is really the tail of the tape. I mean, does it actually make money? Is it due to make money? Became profitable this year. That checks a huge box. Earning forecast to grow 26, almost 27% for the year. But it does say trading below estimate fair value. So Snowflake wise, it's okay. I've seen better. But it's also in so this is showing slightly overvalue with the, what is this? Oh, that's it. Never mind. I want to look at the discounted cash flow. So right in here. So it's showing that it's priced about right for discounted cash flow. But, and that's the thing in tech, I mean, you pay for the speculation, really. It's like you pay for that growth potential. But what is nice is anything that I've looked at this year that shows unprofitable and will not be profitable for X amount of years, I stay the heck away from it right now. Anything that's going this way with positive earnings over the next year, the next 5 years, I'm much more interested in getting some good prices first, and but at least fundamentally having some strength behind it. So anyway, just wanted to throw it out there for some Palantir. Other interest. So I know you and I talked about several other companies. What's that?
We're both in Trade Desk, but do we want to look at Shopify? Are you in Shopify?
I am in Shopify. I think did I tell you that yesterday? I thought I did. I took a trade on Shopify yesterday. So here's my Shopify for my trade room. We got into it's the same thing. I'm playing the volatility. 77 by 95 is the bull call spread. So I bought the 77 call, I sold the 95 call, and then I bought the 75 put, sold the 60 put. So I'm looking for about $15 to $18 of max profit. I likely will not get anywhere close to that unless the move is crazy up or down. but the expected move based on earnings is going to be around $13 to $15 based on the current price. So
I have a
Shopify,
question.
yeah.
When you're saying that your debits have turned into credits, does that mean the value went all the way to zero and then continued to go into the negatives on
No,
those?
it means that if I take a trade, so if I execute a trade for a debit, that means I have to close the trade for a credit, right?
Oh, okay.
So because I pay for the trade initially, I pay a debit to open the trade, I would close the trade at a credit. So even
So
if
if
it was
you
a
closed
losing
it for a
trade,
loss, would it be another debit?
no, it would be, so let's say Disney, okay? Let's say Disney as an example. I paid $6.50 for the debit. Let's say that Disney didn't go anywhere, okay? And I actually, this did happen on PayPal. I can talk about that as a real example last week. So let's say Disney right now had earnings and it went absolutely nowhere. Well, you'd be sitting at a 650 debit that today would probably be showing like a 550 credit, and then a $4 credit, and then a $3 credit. And then if you let it go all the way to expiration and it's still terrible, you'd show a $0 credit. Does that make sense?
Right. So that would just be a full loss.
Right. So if I open it at a debit, I'm looking to close it at a credit. So what I did today was an 825 credit. And so my net profit, that's a closed position. My net debit or my net profit was $1.75 per contract. So that was Disney. Let's switch this around because this happens too. If I do a credit spread, and I did this on SMCI, this was a credit spread. So I did the, deep in the money bull put spread and bear call spread. I don't remember which one paid me. I think it was the bear call spread paid me, but I don't remember the price on this one. Let's go to SMCI. Well, I'll just use an example. Let's say the price was trading. Price is $150, and I'm just making this up because I don't recall what it was. And I do a deep in the money bear call spread. So what I did was I'll say that I sold a 130, sell the 130 call, and then buy the 135 call, and I do that for like $3.50 credit. Now, when that trade moved and it pushes lower and it got me into profit, my $3.50 credit, if I did nothing and I let it go all the way to expiration, I needed to make sure that price was going to stay below 130. If it stayed below 130, I can keep the full $3.50. But what I did instead is price pushed into my area, got below that 130 for a couple of days, and so I closed for a $2.50 debit. So that gives me a net profit of $1 per contract. Does that make sense?
Okay.
Yeah. So when you open a trade for a debit, you're typically going to close it for a credit. When you open a trade for a credit, you're typically going to close it for a debit if you're closing it. Now, when you sell options and you're taking a credit up front, you're either going to manage that for that partial profit, or you're going to let it go all the way to expiration, let it expire worthless, and then try to keep all the credit you took up front. In the exception would be what you and I talk about with those broken wing butterflies. The broken wing butterfly trade allows me to take credit up front, and if we are correct on those pin prices, we can actually have an initial credit on the first trade, and it can still close as an extra credit if you're in that tent, right? When the price goes, if you're in that pin price where if we did a broken wing butterfly like this and price is exactly into this window, like if it's getting inside the tent or it's like pinned at that price, this is a credit right here up front. And then if you really hammer this thing towards expiration, this actually closes for a much greater credit. I've only seen, I mean, again, we got to be spot on with the prices, but I've had that happen, a few times over the last month or so by having some of these credits. I take the trade for $1 credit and I close it out for 50 cents credit. That means that I actually made $1.50 net on the position. But that's like, I don't want to confuse anybody because it's easier to think about it. If you open a trade for debit, you're going to close it for a credit. If you open a trade for a credit, you're going to close it for a debit.
And so when you instead of the butterflies, when you're talking about a on SMCI, you were doing a bull or bear call spread,
Yep.
which is buying a call and selling a call below price. So this is what we talked about last week, I think, when you said you have the risk of assignment, as in the trade could just get called away because you have a sell and a buy call. But if you do it further out in time, like say you did SMCI 14 days out and you were 20 points below price on a bear call spread.
Okay.
So the odds of you actually getting closed out are pretty low until, say, like a day before the trade expires, right? Or is it possible to, or probable to get called out of the trade pretty early on?
So the expiration plays a little bit of factor on assignment, but it's really based on price. If I mean, options are made up of buyers and sellers. If there are buyers and sellers that want to exercise their contracts and I'm the seller of that option and I'm obligated to take the shares, if price moves quickly enough, I've had assignments that are months away from expiration, but I've had assignments because prices moved significantly enough where people are closing out their long options and I'm taking on the sell side of that. So I'm taking on the assignment side. Usually within certain expirations, and I mean, the odds of assignment are probably about, let's say 7 to 10% most of the time. You take an options trade, it's defined risk. Your odds of assignment are typically single digits. But if it happens, and I mean, I know in your case, you said if you get assigned, it's a margin flag or something like that, right? And it puts a little stain on your account for maybe a week or so. Is that what it sounds like for Webull?
Yeah, that's what
Okay.
happened.
So I wasn't worried about the assignment because there's always a way. I mean, the initial trade for me was a defined risk trade. So even if I was assigned, and we use this as an example, so SMCI, we're trading at 821. So I don't even remember what the credit spreads were on this one, but it was clearly probably it was probably like a $2.50 to $5 spread. But if I did, so let's just say we do it right now. So we're trading at 821. If I were to do deep in the money, let's say I do a 900 by 895 bull put spread, and that means that I'm going to sell the 900 put. I'm going to buy the 895 put. And I'm curious what let's say we go out like 2 weeks, and what does that pay? I don't know, but it's probably going to pay us a ton of premium because it's the probability of that thing getting back up there is slim. But let's go out, to the 17th and do a monthly expiration on SMCI. If I did a 900 by 895, so I could risk 60 cents on this trade and make $4.40 if price gets all the way back up to $90. Now, what's interesting is by the 17th, this actually does show the potential that, well, it's a slim potential, but there's a 22% chance that I could actually get this trade back above my price. It's not a probability I want to take, but the nice thing is if I collected $4 of credit and I'm only risking $1, it's not a high risk trade. It's just a low probability trade. But if I took this trade and price goes nowhere, doesn't mean that I get assigned. Even though I'm whatever, $70 in the money here, doesn't mean that I get assigned. But if I do get assigned, let's say that we take this trade here, Frank. I get assigned, so we'll do a 900 by 895, and I'll just keep the numbers simple, and we do a $4. Okay, so we'll say we get $4 credit. Okay, so that's what we collect up front. That means we have $1 risk. Now, if we are assigned, this is what's nice about the trade. Okay, broker assigns us at $900 share price. And this is where traders just need to take a second, just do some simple math. If I'm assigned at $900, I still collected $4 credit on the first trade. So my break even is $900 minus the $4 credit. So if I took the assignment, I would own SMCI at $896. Okay. Now on top of that, I still have, and this is what happens if you get assigned. Typically, a broker that assigns you will let your long options still run, or they close them out together and wash the trade. Now, in my Schwab account, for example, my broker, so Schwab, never closes out my long side of the trade. a tasty trade, they'll close out and they'll exercise. So the assignment and the long side, they'll close it out, neutralize it, and then I'll just have the assigned shares. Or I'm sorry, they'll neutralize it and they'll wash the assignment plus they'll wash the long side. But what I want to show you with the math is I still have the 895 long put that is running. Okay, so if price of SMCI is $850, my 895 is worth $45 credit, right? If it's still trading there, it's still worth $45 of real value because my strike price is $895. $850 is the actual price of the stock. That gives me a $45 difference. Okay. So if I cashed all that in, okay, I cash in the $4 credit. Okay. The $4 credit plus the $45 credit, that gives me $49 of total credit. And where's my assignment price? $900 assignment price minus $49 of total credit. It's going to equal the original dollar risk on the trade, right? So this is why credit spreads, I mean, for some simple math, it's really a great trade where assignment risk is low. So that never sways me like, oh, I shouldn't take the trade because what if I get assigned? If you get assigned, you have a way out. You always have a way out. You're never going to get stuck like, oh my gosh, margin call, I blew up my account. Never, because it's a defined risk when you took it. So you can keep the integrity of the trade, even if it's broken up as an assignment, you can still close out the long side, close out the shares, be done with the trade, and take, at usually worst cases, it's no worse than what you initially took the trade for. The inconvenience is that, yes, you were assigned and it probably puts you in the red. The broker's saying, hey, you owe us money. And they typically give you a window to close it up within, 24 hours or so, which isn't that hard because in 2 clicks, I close out my long put, I close out my shares, I make the trade wash. So it's about the same risk that I took initially. And the same thing, my credit didn't pay out. My $1 risk was essentially what I closed out the trade for. So does it happen? Yeah, it happens. It happens all the time. I mean, we've had 100 assignments in my trading room the last couple of years, but this is how we manage them. So I just think it's unfortunate if the broker makes it more penalizing for you with, maybe that pattern day trading or the margin stuff. But from that standpoint, I mean, it's still, you have a defined risk trade. That's my point.
Yeah, it's not about the loss because your trade value stays the same. It's just your buying power goes away. And if you don't have enough, then you get margin called, or you get limited buying power initially. And then if you don't sell or close your shares after like a certain amount of days. So if you wanted to let the trade run to see if you could become profitable or not, and you don't sell out of it, then you do get margin called, and that's the tough part.
That's true, but you have to remember too, if you're taking a credit spread and your thought is, I really can't afford to own these shares, then if you get assigned, you're just going to close out the trade and take the initial risk. It's nice. Like in my case, I mean, I was assigned on Apple. I was assigned on Apple at 170. Here on the weekly chart. So I'm assigned an Apple at 170. Just in a matter of a couple of covered calls, my cost basis now is down below 165. So what's kind of nice about this is I have a 170 call at this time to get called away with a break even around 164 and change. So I have a solid like $5 profit that I'm expecting to make by, I think, the end of June with Apple. Now, if price comes back in below 170, I'll just continue to sell covered calls and I'll continue to work my cost basis down, and I'll hang on to the shares. But I don't think my intention is to hang on to Apple shares longer than what I have, like probably out to June when they get called away. I also did this on Baidu. I have 100, and as you can see all this. This is what rolling covered calls looks like a lot.
Yeah.
So I took the assignment. I had a break even around $96, put in a covered call. I rolled it out, put in another covered call as a roll. So I roll it out in time, roll it out in time, roll it out in time. And then eventually I was able to roll it out in time and roll it up in price. So I had $100, $98 call, $98 call, then $100 call, $100 call. Now I have a $102 call. So what's nice is I've actually incrementally lowered my cost basis while also incrementally increasing my covered call price to give me more profit per share. So I started out with, 96.76. My break even now is 92 with a 102. So I went from expecting to repair this trade for about $1.25, $1.26, $1.24, I guess, $1.24 profit to now I'm making, I'll make several $1,000s on Baidu if it gets called away. I think it's end of May. So in the next 3-4 weeks, this gets called away, I make $1,000, and I could probably look at it right now and try to roll it again. If I wanted to roll it, again, if I go out maybe another cycle, go out to the June monthly expirations, maybe keep it at 102 again, or like, can I bump it up to 103, 104? It helps. And if I can roll it for a credit and increase my cost or increase my profit potential, it's easy, as opposed to I'll just take the profit and take a brand new trade. I'm already in it, and I'm effectively just lowering my cost basis and increasing my profit potential. Also, I'm long in this stock too. I know we talked about this offline a little bit a couple weeks ago, but Baidu, I like quite a bit. I'm looking at this to hopefully stay with this wedge break. I'm looking to see if Baidu catches some gains to the upside. Another thing, Nick and I didn't talk about this too, but one thing that could also help sustain this market rally, not just US but abroad, could be China. China has been way more vocal about supporting the economy, supporting their tech sector, supporting real estate, lifting animal spirits, so to speak. And there are some plays and exposure that I do have in China that they're right here. I'm not trying to keep all this stuff to myself. It's like I like Alibaba a lot. I like Baidu a lot. Baidu's a little bit more expensive on the snowflake. I think Baba is a slightly better trade. So JD.com is another one. This one checks a lot of boxes. What happened to my snowflake? What? There it is. I was like, that looks way better. This is JD.com. This is a retailer out of China. So it's, to me, it's already been up quite a bit. I think there's a lot of upside potential. The bigger indexes, FXI, KWeb, those are ETFs that are cap related. JD is one, and then Baba versus Baidu. So here's just sounds like baby talk, Baba. But it looks really good. This is, if I'm not mistaken, this is the is Alibaba like the Amazon of China, or is it the Google of China? I can't remember what they do. Technology, infrastructure, marketing to help reach. Okay, I think this is like the Amazon. I think this is like the Amazon of China. So Alibaba, good trade for me overall. Longer term, I like the technicals. I'm hoping that, of course, time this well. Baidu is the same type of thing here. We just have really good price action and a really good technical pattern. And if this is a fulfilling prophecy, there you go. That's at least my target one. And then longer term, I'm looking to see if this measures out, hits symmetry. And we're talking about Baidu at, this could be a $250 stock if you give it time. So I'm trying to give it time. And anyway, so there's some exciting stuff on the horizon for at least some price support. And I do wonder if that also is enough to take us with the U.S. market resiliency and maybe China. That's, you're talking the two largest economies in the world. Whether or not they want to fight over Taiwan later, we'll find out. But for right now, if things are looking good for growth and good for some resiliency and two supporting economies where China is supporting their economy, U.S. is clearly supporting its economy fiscal policy wise, you can't fight it. They say don't fight the Fed, but I think at this point it's like don't fight your fiscal policy either, because it shows how powerful it is.
Have you looked at Rivian?
I have. I know that it's up. So they have earnings tomorrow, I believe. Nope, Tuesday. So it's today after market. The issue with Rivian to me is, here's a good example. Okay, I'll just go back to this, and we'll look at the numbers. We'll just like we did yesterday with Disney. Rivian, currently unprofitable, not forecast to become profitable for the next 3 years. Insider selling, volatile share price. So revenue's forecasted to grow, yippee skippy, but still not profitable. And if it wasn't for this like emergency cash flow that they just received over the last couple of weeks, they secured $25 billion or something like that to keep operations running, probably give them another X amount of dollars cash for maybe the next 12 months, maybe the next 24 months. I don't know. This is in their Ohio factory, but it's a car company that I don't think plans on being a car company forever. I think they're trying to get like Rivian. The big talk was Rivian's going to be the Amazon fleet, right? Amazon delivery vehicles are going to be Rivian. Okay, cool. But is that enough to make them a permanent automaker that's going to be competing with the likes of, GM and Ford and Honda, Toyota, Tesla,
Well,
maybe?
not health-wise,
Not health-wise. Definitely not health-wise.
Volatility-wise.
Okay, but what do you do with an $11 stock? If you want to trade options around $11 stock, let's price it out. Let's price it out, Frank. Okay, and then I'm gonna tell my Equities on Demand students we'll start the session around. We'll go live.
Well, maybe we shouldn't, because I know if we're expecting a 50-cent move either way, that's going to be a very bad risk to reward.
I'm just telling you, it's going to be a terrible price. Because the best you're going to get is probably 50-cent options, right?
Yeah.
And let's look at the numbers, because look, let's price it out. Let's do it methodically. Let's focus on the process here. So Rivian, okay, expected earnings around 14.92%, pretty consistent, getting double digits. So I don't mind going like 13 to 14%. So what's your 13 to 14% move on a $10 stock? Nothing, man. It's like you're going to get $1 to $2 movement unless it just blows it out of the water. So let's say we take a 14% move on a 1050 stock. Okay, so 14% out of a 1050 stock, you're looking at $1.47. All right. The weekly expected move is about $1.97. So if we can get appropriate options pricing, you're expecting $1.47 to $1.97. What you need to do here with earnings is you need to see Rivian do something great or something terrible. Because if it's great and all of a sudden this thing goes to, I'm not saying it's going to 20. That's probably impossible, but we could probably have some really surprise move at $12.50 to $13, $14, and it's like, oh my gosh, it blew out the market and expectations, and you'd make money on the trade. But let's price it out. So we're expecting a $1.50 to $2 move. Let's look at Rivian and let's see what type of options we have, because they're probably not great, but let's find out. So I would probably go to the 17th. I want to finish this up and make sure how often on the earnings plays have we actually hit a 14 to 15% move. Let's find out here. Okay, so maybe this checks a lot of boxes here, Frank. We'll find out. But this one does. Yeah, we need to go 14. We need to go, let's say 13 to 14%. This one gets to 11.6. It's close, but doesn't count. This one, 13%. 8 days later, it's right on. I hate the cutoff at 8 days. Anything over that, there's no way I'm going to stick into an earnings play, 13 to 21 days out. Obviously I could with the bigger cycles, but if I'm doing debits, I don't want to pay for those options. I want to sell those options. This one, right at expiration, a 13% move. You could probably get away with that one. This one doesn't get there. This one does get there. This one does get there. This one does not get there. This one does get there. This one does not. And this one does not. So we have 1, 2, 3, 4, 5 yeses, 5 nos. Flip a coin. That's about as good as it's going to get. If we priced it out, this is what I said. You're going to get at best 50-cent options. So your best play would be this. Let's see how much the broker wants to charge you. They're going to charge you probably $2 for this option. $10.50 and $10.50. You're paying a premium for this, dude. If it's $1.50 that I'm calculating, implied volatility for next week is $1.91. If you're lucky, you can take a trade for $2. Here's what I would do on Rivian. If I'm going to take this trade, I'll risk $200. Okay. If I risk $200 and Rivian does something fantastic or terrible, then this goes from $10.50 to maybe $13, right? I get a $2.50 move or a $3 move. Otherwise, I'm just wasting money, because the expected move is so minimum. If we could trade like 25-cent options, this might be a little bit better, but 50-cent options, I think it's spacing you out too much, where you don't have really the agility to put your option prices where you want. And for the expected move as $1.90, you're paying a premium on top of that. If I'm calculating $1.45 or $1.50 move and I'm paying $2.10 for it, I'm already behind. That means I've got to have price cover an extra 50, 60 cents, which in a stock that's only $10, man, that's a big move. That's like you need an extra 10% move. So I just think it's a bad trade. But I'll say this, just for fun, I'm not going to take the trade. I don't feel like wasting money. But as we talked about it today, this is going to be a hypothetical. We'll do a 1050 long straddle, and it's for $2.10 to $2.15 debit. So you and I can talk about this later in the week. If we have earnings, you go out to next Friday, the 17th, but you can put on this trade right here. And guess what? If tomorrow's earnings, Rivian's at $14, maybe this thing's trading for $3.50. You made a couple bucks on it,
I don't like straddles.
I don't either.
That's a bad idea.
I don't like this trade at all, which is why I'm not going to take it.
Okay.
Yeah. So, but I just want to price it out and see, like, yeah, this would be the trade. And if anybody's like gung ho on Rivian, I mean, the people I feel bad about for Rivian would be the people that were, hey, I'm on the early wait list to buy my Rivian vehicle, and I get to own the shares at $70 pre-market before we go public. And then they go public, and all of a sudden, I mean, could you imagine getting the ability to own an IPO early at $70, and all of a sudden it's up to 180, and you're loving this thing? You're like, oh my gosh, this is the best thing ever. But if you didn't take profit, you're sitting here holding the bag at 1050, down 90% from where you started. I mean, it's just awful, man. So I don't know what this ever becomes outside of a buyout target. If Rivian's going to be, hey, we can't afford to stay open anymore. Amazon, would you like our technology? Would you like our cars? Would you like our this? And maybe Amazon becomes, an EV spinoff because they have the Rivian that they bought in 2025. But I think a lot of these EVs are that. I think a lot of them are buyout targets because they can't survive. They can't survive long enough to stay in the game. I mean, this happened to Workhorse, Lordstown Motors. This could be a Fisker. This could be a Lucid. This could be a lot of these. Who knows, man? I mean, EV was great and is super exciting, but now it's not. I think the reality is it's more expensive. Demand has dropped like crazy. The prices are coming down, and the expenses for an electric vehicle are higher. So your margins are being squeezed like crazy, which is why Tesla's been dropping prices so crazy. So anyway, I just think EVs are a bad spot to be right now. In Rivian, there's nothing about it that gets me excited. I'd rather trade Palantir than trade Rivian.
Gotcha.
There you go.
I'd rather own Palantir.
Yeah, there you go. That's probably even better. Longer term. So it's funny. That's one of the few shout outs that I've seen. You're giving Kathy Wood. Her ears are burning right now. She's probably all excited. That's one of her disruptive technology plays is actually catching some fire. I honestly don't even know if ARK is even in Palantir anymore. I feel like they dumped it when it's down here at $7 and took a huge loss. Just going by the nature of how they perform. But speaking of ARK, and then we'll wrap it up here. Yeah, I think this is such a long ways off. We'd have to see another pretty big growth run for this to be. I don't know. Maybe ARK never comes back to 160, but disruptive tech.
If she realized a lot of loss already, then probably not. But if she's still holding, then
yeah, I mean, from what I've seen, the timing of those trades have not been great, and I think a lot of it is there's pressure, right? I mean, you're trying to maybe reallocate, you're trying to rebalance. I mean. Would you want to sit in an ETF that has zero inflows and just outflows because your choices and your ETF makeup are just so crappy? I mean, that'd be an awful position. So I'm sure there's a lot of moving and shaking just to get more inflows or get some investors stoked about growth but I don't think anybody's stoked about 5-year growth. I mean, Nvidia and semiconductors might be the only space right now where people are like, it's going to go. I'm really more curious on XLU. I took a position. Man, this thing is freaking up, man. Wow. I did this on XLU yesterday. I just put in, I'm just going to do a wheel strategy. I got a 95-cent credit for a $68 put. I'm going to own some shares of XLU, partly because, man, this thing is ripping so aggressively. This is like a 13 to 14% move to the upside, which I know isn't a lot. But if I own the shares at 68 and I can sell some calls against it, lower the cost basis a bit more. The nice thing is a stock that only cost me about $68, I'm getting a 50+ cent dividend every quarter. That's not too bad. That's not bad at all. I mean, think of it this way. If every quarter I can, without even selling a call here, Frank, if every quarter I lower my cost basis by 50 cents, that's pretty good. So in a year's time, I'm taking off $2 of my cost basis with a dividend. That's pretty good, man. And obviously, if I want to sell a covered call, I probably wait until price is up here and it's already appreciated 15%. You take a 15% move, right? A 15% move, and let's say that for the extra year, if we get to this high, it's around 15%. If we take another $2 out of a $68 stock, you just increase your dividend. It's the dividend juice here for another 3%. Instead of making 15%, if you close it out at the highs, you actually make 18% with dividends. That's not bad. That's not bad for a sector. So anyway, that's the boring stuff, right? Anyway,
Yeah, kind of.
Just kidding. No, it's not boring, dude. I'm just kidding. I just feel, let's see the comments just like, sell gold full margin, gold buy. It's like, yeah, whatever.
You're talking about owning a spider ETF of utilities.
Correct. Which is honestly not exciting compared to other sectors. If I want to own consumer discretionary or communication services or technology, there's way more volatility in those. Those sectors single-handedly carry the broader market the last couple of years, right? That's your Mag 7. But now it's like energy still leading the way. Utilities has made this sneaky comeback. And the nice thing about utilities is I think this direction is pretty solid. I mean, if we have a pullback, great. I'd like to, have some of that action on a pullback, but I don't know if we're going to get one. I looked at this yesterday. It was a 68, which is why I did an at the money put. Now it's a 69 and change. So anyways, what it is. If I get a sign, cool. If I don't, then I guess I'll just make $100 per contract. So, all right, bro. Let's check. I mean, anything else earnings wise? Anything else this week? I mean, I'm going to take. It looks like I'm going to take a freaking loss today at NDX, which sucks. I don't want to.
I want to look at off stream. I'm going to look at Shopify and see what I want to do with that, and then I want to look at Uber as well. So
I looked at Uber. I priced it out. I didn't like it. I looked at it the same way, like earnings, post earnings. Uber didn't price out to be an effective trade for me. Shopify did get in. I think I typed it in our chat. So 77 by 95. So it cost me 770. The expected move is 13 to $15. It's right here. Here's Shopify. So that's what I calculated out. I went out to next Friday. I've got a $15 to $18 max profit. But the expected move is going to be hopefully $13 to $15. If we get that initial move on the reaction, hopefully my 770 debit can be showing 970, 1070 credit. I'll take the profit prior to waiting to expiration. But if we see a big blowout move on Shopify, awesome. If we see a huge miss on Shopify, awesome. I just want to see that volatility. Yeah. So I'm happy making a couple bucks there if I can.
Cool.
So all right, that should do it for me here. But yeah, let's keep the combo going offline. And other than that, I don't really see a lot, man. Shopify, I'm fine with. We did Disney, we did Palantir. I think the other one you actually showed me TTD, so I got in that one. I looked at Airbnb yesterday. I didn't really love it. I looked at Uber yesterday and Lyft. I didn't really love it. I'm certainly not going to trade a meme stock like AMC. Marathon Digital, that's a Bitcoin mining company. Maybe, but it'd be similar to Rivian where the prices just aren't going to be great. So I probably won't touch that. I think I'm good on earnings. We've got CPI and PPI next week. I might trade a lot of indexes next week with volatility. This slow freaking melt up it's just annoying me. Like the NDX trade I thought was pretty solid, but until it's not. I mean, we're just up on the day. We got 3 daily pivots in a row. I do have some pending orders trying to get filled, but what's that?
The open interest is down for COT, so there's a lot of lot of people getting
no seller market. Everyone, it's the low volume drift. There's just no sellers. Yeah. Yep. And again, there's no sellers until there are, and maybe those sellers are back up here, right? We hit some levels, and we've got gaps. We got gaps.
That could be a broken wing play there.
Sellers get more active when it's appropriate, and it's another wild sell-off window, but. Until then, it's like we'll just work our way up in this very slow, drifty market.
I think that broken wing play could be good at the highs.
It should be. I'm going to look at it today. Yeah, I was curious. I mean, I think I have a bunch down here. I have like 3 or 4 broken wings that are probably going to be full profit. Over the next. I think I go out to like May 17th. And then another one out to June 7th and like May 31st. I've got a bunch of them out there that are all down here. But yeah, I might revisit the ones at the tops and try to give myself a little cushion in case we breach the highs. But anyway. Fun stuff.
Yep. We'll talk about it.
Guys, John. All right. Thanks, Frank.
Yep. Thank you guys. And thanks, Chris. I'll talk to you pretty soon.
Sounds good. All right, buddy. Hey, everybody. Thanks for watching. Subscribe to the channel. Like the good stuff. This is great. Enjoy the day. Bye.
Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.